Hey, it's Anthony, parent of IRS Medic, and I have Yael Lazar on again. She's a fantastic guest, and our views go up when she's on. So I really appreciate having you here, Yael. We are going to be discussing one of her favorite topics, not so much mine. So I want to understand maybe I should be in love with, maybe love is not the right word. Maybe I should enjoy cryptos a little bit more than I should. And so here we are. Yael has a presentation all ready for us. We are going to go through this, and we're going to start off with Yael. Basically, we're going to assume people don't know anything about cryptos, right?
Correct.
You think that's a good idea? And I think that's going to be helpful to a lot of people who aren't really in it. So let's just assume you know nothing about it. But I would say this video would be good for the advanced investor, because we're going to be going over some tax strategies that are happening. And I also think once you understand the mechanics of what cryptos really are, it sort of helps you figure out the tax angle to it. So Yael, thank you so much for joining us today. Really appreciate it.
I always have the most fun.
Yeah.
So the slide presentation that I've put together is a presentation that I gave last year at the National Association of Insurance and Financial Advisors. Basically a great group of people, but a lot of them knew nothing about cryptocurrency, right? Yeah. So, you always hear a lot of different things in the media about how it's a Ponzi scheme, how it's a fraud, a lot of people don't understand, and crypto is so much more than just the cryptocurrency. It's really the technology behind it, the blockchain technology, and that's what's here to stay.
Okay.
Where there's a complete shift going on in our financial system and the infrastructure. Everything is moving to a blockchain. So basically, everything that you can think of are land records, deeds, your medical records, voting ID. I'll talk more about that, but all of that is going to be, on the blockchain.
So so Bitcoin isn't blockchain. Bitcoin utilizes blockchain technology. Okay, here's a question for you. Maybe you know this, maybe you don't. Is there any cryptocurrency that doesn't use blockchain technology?
Not that I'm aware of. No.
There's a niche for you right there. All right, well, maybe not. So it starts off. Start off in a fun way here. My client wanted to pay me in Bitcoin, and
right. So please. I have all these notes that I have here just because I want to make sure I get through and make sure everybody understands. So I ironically was first introduced to Bitcoin by one of my 80-year-old clients. Shocking. I know, not your typical client. You think it would have been someone in their 20s, but no. He wanted to pay the balance of my fee in Bitcoin. And it was really interesting because I remember thinking at the time, what do I want Bitcoin for? I need cash. I want dollars. Now any client that wants to pay me in crypto, hands down, I would take the crypto over the US dollar. So it ended up, sending me down the rabbit hole of just researching and getting to know more about Bitcoin, Ethereum, and all the other cryptos and the technology. So most people by now would have probably heard of Bitcoin and Ethereum and maybe some of the others like Dogecoin, because, if you flip to the next.
Oh, yes. We have,
Elon Musk and his
I've heard of him.
Tweets, right? And his Doge tweets. But, a lot of people don't really understand what it is or how any of it works. So flip to the next page.
Yep.
Younger generations are already using, some form of digital money, right? In fact, my daughter recently got paid for babysitting and was very annoyed that the woman paid her in cash. She did not want the cash. She wanted me to take the cash and Venmo her the money, right? She just they don't want to deal with cash or checks. Everything is digital. So the younger generation is already poised to have an easy transition, into digital dollars. So interestingly enough, next slide, I was on vacation and I had gone to a local hippie flea market, and one of the vendors at the flea market said that they accepted Bitcoin, Ethereum, Dogecoin, XRP, for as payment. So you're seeing it pop up more and more. And Ray Dalio, the investor and hedge fund manager, believes that cash is trash, and it will continue to be. And it, may seem hard to believe, but our future grandchildren, I don't think, won't even know what cash is, as it won't even exist. So
I could see that happening.
Bitcoin's really exciting because we haven't had a new asset class since the 1600s. And it will provide financial gains beyond what the stock market can deliver. And for those who are invested early, like me and others as early adopters, this is going to be the greatest shift in generational wealth,
So here's the two problems that I have with the alternatives, because people will say, well, you know what, that's nonsense because your cryptocurrencies are just made up out of thin air. You want something like gold. That's really what is your security. And this is what I say. Well, as soon as you wind up with any large amount of gold, what do you do with it? And I hope you're putting it in your safe, and I hope that you make sure no one can take it, because if you are getting a gold certificate, how do you know that's your gold? And it's been reported, because let me tell you something. I have friends who are gold traders, and they kind of tell me what happens. Allegedly, this is what happens. There's a gold storage vault, and somebody says, oh, hey, so and so is going to go visit and see, well, they want to go inspect their gold to make sure it's properly marked and everything like that. So what they'll do is they'll take the gold that's there and they'll melt it, and then very quickly put it with new stamps on it showing that the ownership, and that the gold can be counted. Multiple people own the same gold, right? So that's called so that's just something I don't necessarily and I've seen this, and some banks have admitted to doing so.
Mm-hmm.
So where's the proof that you are the sole owner of that gold in the vault? And just inspecting it, gold is probably the most easily meltable. It's one of the most easily meltable metals around, about as easy as lead as I think. Mm-hmm. So it's very easy for these banks to claim it again and again. So that's my concern with gold, in probably a lesser degree to silver, just because silver is so cumbersome, which is sort of the problem with it as well. And that's why you wind up with paper. So then we're left with the US dollar. It's like, okay, well, what about the US dollar? Like, well, they're intentionally devaluing that. Intentionally, $20 used to buy you an ounce of gold.
Well, it's not
so what?
That's the argument people say. Well, crypto's not backed by anything, and so my response is neither is the U.S. dollar.
Not backed by one thing. Since 1971, we went off the gold standard, and then that's when we saw the decoupling between productivity and compensation. So something happened there in 1971. So that's sort of where I'm at. I don't necessarily look at cryptos as the next wave, but I look at, well, what's already here. And we see problems, big time problems with it. And then also, with foreign bank accounts, we have to deal with a lot of the IRS compliance issues too, as well. And then the transaction costs of sending money back and forth, there's another issue. So it's not necessarily that I'm not a huge cheerleader of the cryptos, even though I did buy one Bitcoin, I think in 2013. I did buy. I was a very early adopter. I was like, oh, let me try it. Let me see what it is. I spent it, of course, because I didn't think anything of it. And I was like, let me just try it out. But it's really because of what's going on. It's the last person standing. Yes, I understand that crypto isn't backed up by anything. And then without a functional, this is the other thing too, as I see as an issue, without a functioning electronic grid, it's also worth nothing. It doesn't exist. Mm-hmm. Cryptos only exist in a world where there's electricity. If there's no electricity, there's no crypto. So those are two things. But that being said, these other things we got real problems with. That's and whenever and gold is just yeah. And here, what this is what one of my friend who's a gold trader said. He just said, as a matter of fact, he said, Anthony, all gold is stolen. Gold is stolen and it's remelted, and then magically. So it's just something to think about. Somebody's looking to steal your gold. So, yeah. Anyway, so continue. So that's my skepticism. But reality is these other things aren't as great as people make them out to be.
Right.
Yeah.
So let's move to
let's move on here.
All right. So this is a cold storage wallet. This is where you keep your crypto safe. We have a saying: "Not your keys, not your crypto." So every cryptocurrency, you have a wallet with an address, and you transfer your crypto off the exchange where you purchased it onto a cold storage device like this. And you could have $1 million, $2 million, $10 million worth of crypto on that little device. Much easier to carry around than $10 million worth of gold, no?
A little bit, yeah. And then you also don't, and then if you have the gold, well, how do you transfer it to somebody else? That is a very complicated process of inspections back and forth. I believe it's more complicated than a house closing. The money is often a little bit more, and the opportunity for that theft, right? It's really there. So wow, that's a huge benefit right there.
Never ever keep your crypto on the exchange. You purchase it and you move it off. You can move it onto a digital wallet on your phone, on your computer, but the safest is really to move it off the computer completely onto this cold storage wallet.
Well, but what you said is true, but a lot of people leave it on that exchange. Isn't that true?
Yes, and exchanges can be hacked.
And that's sort of where we ended up with a bunch of problems and people losing their wealth is they never took the money that they had and moved it off
And
of
worse
the.
is if you
Yeah,
lose your security phrase, your 12 or 24 seed phrase, security phrase, you
yeah.
can access your crypto. You lose
Sorry.
that seed phrase. I think there's a guy out there that has maybe $250 million worth of Bitcoin that he can't get to because he can't remember his seed phrase or where he put it.
Oh man, no, that's something. Oh boy, that is a very very sad day indeed.
It's
So oh yeah, so here it is. We talking about some of the problems with our current monetary system.
right.
Um,
Payment systems such as credit cards and wire transfers are outdated. Think about when I have to send money to my daughter who lives overseas, it could take 4 days, 5 days, cost me $50 in wire fees. You know,
mhm.
in most cases, middlemen like banks and brokers take a cut of the process, making the transactions expensive and slow. You've got financial inequalities grown around the globe.
And I just want to address that really quickly because I think part of me would have instinctively said, "Oh, what are you doing?" Asserting that argument into this. But in a way, you're really right, and this is what I've come to believe that the valuation of our currency. Well, who's been a beneficiary of it? There's somebody's been benefiting from all of this, and that is really when you're able to devalue the currency of people without doing anything, and it's everybody, you're able to really steal a lot. And so I actually agree with this now that what it actually is increasing. All of these policies are designed to make people more and more poor, while a certain select group of people get better and better for some reasons we can't understand or aren't allowed to ask. So that's absolutely true. And I think I mean, imagine that. Imagine having like money that wasn't devalued, that our purchasing power was the same. What it would be like we're giving a raise every day because we're just used to lose less and less and less, less and less and less and less.
Right.
And then here too, about 3 billion unbanked or underbanked people can't access financial services, and that's about half the population of the planet. And and especially if you are not a politically popular person, we saw that in Canada, where people are debanked. Your right to bank is taken away, and so those are some significant problems indeed. That centralized authority, pretty scary stuff.
Yep.
First ever
So
cryptocurrency was Bitcoin.
it's
Oh,
Bitcoin.
did I ever tell you where where I bought my first Bitcoin from? Guess
No,
where it was?
where?
Mount Gox. That's how long. That's how long ago it was. Yeah. So Mount Gox is actually this is just sort of funny because this was the top Bitcoin trading platform. What it started out as was a platform to trade Magic the Gathering trading cards. But then someone's like, oh wait, there's this other thing called Bitcoin. So Mount Gox actually stands for Magic the Gathering Online Exchange. Just hilarious. That was the first one around. So that's just sort of funny. Now correct me if I'm wrong. Nakamoto is rumored to have created, but we don't know for sure. Is that right?
I don't know who he or she is.
We don't know who he or she is, and that's the person who allegedly made it. I think other people might go and say, well, this is probably, maybe cryptocurrencies are a government program as well, and that this is hey.
That conspiracy theory too. So
Yeah, I don't know. You gotta wonder. Keep an open mind, right?
it was created to be the first purely peer-to-peer version of electronic money that took out any sort of middleman, right? All right, so
yeah, what is the blockchain?
all right, so let's explain this so that everybody understands the technology, right?
Yeah.
So the blockchain was initially developed in 2008 as an online network to track Bitcoin payments. Each transaction is recorded with others in a block. So you see the blocks up there. A block is essentially a line of computer code, and each block of code outlines the movement of Bitcoin as payment. And after a block is verified, it's added to the chain of the previous blocks, hence the name. So think of it as a bookkeeper adding entries into a ledger, except this ledger is public and it's online. Now imagine a whole suite of totally secure digital ledgers of economic transactions that can be programmed to record and track not only financial transactions, but also virtually everything of value. So the blockchain can track things, like I said earlier, medical records, land titles, even voting. It's shared, distributed, unalterable ledger that records the history of transactions, starting with transaction number one. It establishes trust, accountability, and transparency. And so by storing data across its network, the blockchain eliminates many of the risks that come with storing data in a central location. So if you look at the screen there, each block is like a page of a ledger, and it contains three main elements. The first element is the data, and the type of data depends on what the blockchain is being used for. The second element is called a hash. And no, we're not talking about that kind. It's a hash in
blockchain. Of course, I don't even know why you would say that. I don't
it's because I know. A hash in blockchain is something like a fingerprint or a signature, and it identifies the block and all its contents, and it's always unique. The third element is the hash of the previous block. So this element is precisely what makes the blockchain, because each block carries the information of the previous block. The chain becomes more secure. So here's an example. So block one contains data, which is like 16 Bitcoins from John to Mary. And the hash simplified, you'll see is right there. The previous hash would be 000 because it's the first block, right? The second block would contain 10 Bitcoins from Mary to Jennifer. And you see the hash would be 2BR1. But then the third element is the hash of the previous block, 3W8F, and so forth and so on, right? So they all connect and they refer to the previous block, and that's what links it together and makes
okay. All
and makes it secure. So you want to flip to the next?
Absolutely.
Next slide.
Yeah.
Right. So did you take my slides out of order?
I did not. I did not.
Go to the next one. So this is just blockchain uses.
Yeah.
I feel like I'm missing some slides here, but it's
okay. Well, I'm sure they're here. So here's a comment that we have from Suzanne. Okay, and this might be a good place to ask this one.
Yeah.
She's okay, great. But some of the crypto kind of has been outright scams. Let's just be honest. Some of these things that are coming out, they've just been scams. So what's the relation between what's that?
It's not exactly that cryptocurrency itself was a scam. It was certain platforms that did certain types of financing and leveraging. You have to be clear. It wasn't the individual, crypto.
It wasn't the blockchain that was it wasn't the blockchain that was exposed that was utilized for fraud. It was something else. The blockchain, right? So you say, well, the blockchain didn't fail. It was something else in the
FTX,
right.
The bad apples, the players. But just for example, Bitcoin. I wanted to go back and just explain to you how it's secure and how it works.
Okay.
So each individual computer is connected to the network is called a node, right? And each node has to verify a transaction before it's added to the chain. And by storing data across its network, the blockchain eliminates many of the risks that come along with storing the data in a central location. So think of it this way. It's more efficient for criminals to rob one giant central bank than thousands of individual smaller banks, right? And even if the smaller banks are less secure, criminals would have to break into thousands of smaller banks to steal the equivalent of the motherlode of that larger bank, right? So you might be wondering who manages this blockchain, because I think that's what people have a hard
There
time,
you go. Right, right. Yeah.
right? If it's not a central authority. So the computers that make up the blockchain are owned and operated by people called miners. And there are miners all over the world that bear the cost of maintaining these databases. These miners provide the computing power
Ah,
necessary to run the Bitcoin blockchain. Miners will solve complex cryptographic puzzles via software to add transactions to the blockchain and to keep the network running. And the incentive for devoting their time and their processing power is a daily Bitcoin reward or whatever cryptocurrency they're mining, other than Bitcoin. And because it's called mining because this process helps extract new cryptocurrencies from the system. Anyone, including you, can join this group. Your computer needs to guess a random number that solves an equation that the blockchain system generates. And that's why you need a powerful computer. The more powerful the computer you have, the more guesses it can make in a second, thereby increasing your chances of winning this game, right? Of if you manage to guess right, you earn Bitcoins and get to write the next page of the blockchain transactions. And this is called proof of work. The computations are so complex that they can only be performed with extremely powerful computers. And the point of these so-called proofs of work is to establish a high bar in terms of energy and computational power expended that engaging in fraud becomes unfeasible. So, for example, is it theoretically possible to hack the blockchain? You would have to hack 51% of the computers in the entire network simultaneously, and it would require a massive investment of capital. The website, Go Bitcoin, estimates it would cost $19.7 billion in raw computing power to hack the Bitcoin blockchain. And that's just the first obstacle. A hacker would also need the computer power equivalent to 10 days worth of New York City's energy consumption to even attempt to hack the Bitcoin blockchain. Furthermore,
all right.
to complete the hack, you'd have to get it done before the next block was mined. So the Bitcoin blockchain has more than 100,000 nodes that validate the transactions, and blocks are mined every 10 minutes. So the bottom line is a hacker would have to compromise more than half the computers in the network at the same time and do it all under 10 minutes.
And I think I think the big thing is that why would you spend $18 billion to hack it when you could just start mining yourself? You might do a little bit better. You might get a little bit better return on investment if you just say, oh, I'll just take this money and or if you work at a university, put a little Bitcoin miner in the corner there, and probably no one will notice it. That's I'm sure. I do wonder how much that goes on. I do wonder. That might be a little bit lower level thing to do. So essentially, what you're saying is like, look, here's the thing. It's like, yeah, there are vulnerable it is vulnerable to being hacked, but the difficulty would make it so that someone would probably do something else. Now, the other thing, this is something I heard years ago, is that quantum computing would end it, because quantum computing would then be able to somebody would be able to do the same thing with a lesser energy demand. Anything? Do you think that is something? But again, if you had a quantum computing, why wouldn't you put that to work Bitcoin? If you had that significant of an energy advantage, you don't need to scale up to this massive thing. You can just run your one miner and you'd have a greater ROI than everybody else. So that would seem a more realistic way that quantum computing would enter the system, because you just need one computer. You don't need a whole network, and you can have just a massive advantage, and then everybody else gets their quantum computers up, and now the system went back to equalizing again.
Yeah. Hey, look, everything is hackable one way or another. I had a
Yeah.
friend whose teenage son was mining, Ethereum from home, on one of his computers, and his miner, he got hacked, right? And
Yeah.
I mean, he only
Yeah.
had $1,000 worth at that time in rewards,
Yeah.
but to a kid, it's a lot. Listen, it's a new field, it's a new area.
Yeah.
There's, we're trying to get regulation in the space. There's a lot going on. It's a new developing trend, new asset
All
class.
right. All right, so I think we did a good job of giving the background. Now, there's a bunch of different cryptos. We don't need to go into all the different ones, but I want to get into some of the tax strategies that you've laid out here. I think we have some really good ideas here. And let's start off with your first one that you have, the charitable remainder trust. Charitable giving is often a way to get fantastic tax savings. So,
Yeah.
Could you walk us through this? How this would be? So in your, let's see here. Let's say that you have $1 million in crypto gains with a basis of, I guess, 700,000. So a gain of $300,000. You're talking about this in this here.
No.
No. Oh, I'm sorry. No. No. You're talking about $1 million of gains in a tax bill of 300. Okay, I got it.
Not 300,000 if you sold
Okay.
it. So, this is a great idea. You can basically take $1 million of crypto gains. You create a charitable remainder trust.
Okay.
You have to have the trust set up first with its own digital wallet. You transfer, then you don't sell it. You transfer your $1 million of crypto gains from your digital wallet to the charitable trust's digital wallet.
Okay, right? I got you so far.
You're thereby making your charitable donation, right? At the end of the day, upon your death, this 501c3 charity of your choice will get $1 million in crypto, or just $1 million, right? During the lifetime, you are the lifetime income beneficiary of this trust. You are the one that controls the money, right? Is there another slide next?
All right.
You have all the steps, right? So you donate to the crypto, to the CRT. The reason I say donate is that the CRT is a charity in and of itself. And when you make this donation, you get a tax deduction based on the fair market value on the day you donated it of about 35% or 350K. You don't get it to take it all in one tax year. It'll be spread out over 5 years. But when you file your taxes, you get an immediate deduction, right? So that's already, that's already a tax benefit.
But I lost my $1 million. So
you didn't lose it.
Tell me how this is going to help me.
This is the gain. You still have the gain. So you sent it to the charitable remainder trust, right? Crypto is sold tax-free because you're not selling it. The charity is, right? So that's tax-free. So now you have $1 million sitting. So that's why it's really important that you transfer the crypto and not sell it and then donate it, right? If you had sold it first.
Got it.
So you transfer, you make the donation, then within the CRT, then you sell it, right? So now you have $1 million sitting in the charitable remainder trust, right? So if you had sold the crypto yourself, you'd only be sitting on 700,000. Understood?
True. Very true. Yep.
Okay, next slide. Okay. So within the CRT, since you're the lifetime beneficiary, you could purchase within that CRT an annuity of about 8%, which will give you about $80,000 a year for the rest of your life, right? And that $1 million is asset protected, right? It's all protected within that trust. Now, upon your death, who gets upset? So the charity gets $1 million, but who's
your Chihuahua sounds upset.
Yes, my Chihuahua. But your children, your family, thinking, hey, that's $1 million I just didn't get that my parents left to charity. So go to the next slide. All right. So you can purchase an ILIT, the life insurance policy. You set up a life insurance trust that purchases $1 million with your children as heirs. So upon your death, so over 5 years, you're getting a charitable deduction. Upon your death, you're getting $80,000 approximately of income every year from the annuity.
Okay.
On your death, the charity gets $1 million tax-free.
Okay.
Your children get $1 million tax-free as life insurance beneficiaries.
Okay.
And the IRS gets a big fat zero.
Oh, wow. And they were all about to get that $300,000. Well, some of it to the state as well. So that's why I think your effective tax rate of 30% is pretty spot on, to tell you the truth, because we have that 3.8% net investment tax too.
Right.
On top of that. So, you're not going to get it for a lot of people. They're not going to get out for less than a 23.8% tax rate with the feds, and then add in what you have in, some of these high tax jurisdictions. Yeah, 30% is really what it is. And it's really nice that this really does work out. These numbers really do work out, and it's a great
This
way to.
this is what the
Um,
elite do. This is what the elite do. They have. Why do you think they have all these? Yes, they're philanthropic, but why do you think they have all these charitable trusts?
Yeah, there's well, and I would say, the nonprofits, they're all corporations that just don't have shareholders. That's there's no shareholders there. Hey, guess what? So that's a pretty awesome move there. I really really like that a lot. And that, the thing is that because the problem is when you sell, your crypto, you immediately take a discount. The taxes come off of it. Now that money that you earned can no longer be working for you. So
Right.
this allows that asset to still be working for you. Now, question on the charities you're allowed to donate to. Can you create, a your own
Yeah.
charity that would?
Gotta be a
Oh,
503 charity. I have two of them.
really? Well, so somebody wants to create a charity to increase mountain bike access in Connecticut. That would work, right? That would.
You have to get approved, by the IRS, right, for a 501
Sure. Well,
charity.
I mean, I have a public purpose. Wow, that'd be something. So really, you're able to do the things you want to do with the money anyway. I mean, and I find, for what I find for, our clients, the clients I have are just wonderful people who are incredibly giving. And what's really nasty is IRS takes away from them and spends it on useless crap. Whereas what they would have done with the money would have been much better and would have actually helped humanity. So this is really helpful by putting in the trust. You're actually can make the world a better place,
Yeah.
because who knows where that money is going. That's all for buddies in Congress, and we don't get a say over any of that. This keeps the decision with you. This
Right.
keeps you in control of what happens, how you want your assets to benefit mankind. So,
Yeah.
I
I mean,
like this a lot.
I've set up two 501c3s. One of them was called Angels for Austin. It was to provide medical, legal, or any other supportive care that children with Landau-Kleffner syndrome had. And at the moment, there's only about 500 kids around the world diagnosed. And my friend had a son that was one of them.
Wow.
And then I set up a scholarship fund, in memory of my father and his siblings who were all Holocaust survivors. And in our family, education was most important. So I set up a scholarship fund in their memory for high school senior girls who were going into STEM fields, right? Because it's typically male dominated. There weren't enough women in the STEM fields. And so we were giving out college scholarships. And so you can set up your own 501c3. And that way, that the money is going to the actual purpose and beneficiary that you want it to go to. First, I mean, there are a lot of great charities out there, but you don't always know how much of the money is actually going to the cause and how much of the money is going to their administratives and their salaries and everything else. So this way, as long as you're donating to a legitimate 501c3, you know,
Well, and this is the other part I love about creating your own one, is that you're right. When you get to that bloat, when you get to that administrative bloat of the large nonprofits, this is how the scam works. And I really got to say, it is a scam, and it works for every nonprofit organization, including education. The people who run the nonprofit want to be paid more. They want to maximize how much return of investment that they actually put in, of their investment of their time that they get in. The way the tax code is set up is that, well, what's the comparable compensation of someone in the private sector who handles a business about the same amount? So really, the only way to get more money is if you're working for a university, working for a large nonprofit, is you need to build. You need to bigger, more money coming in, more money coming in, more money going out. That means you can be paid more. But that's a growth, that is a growth philosophy, not necessarily a helping philosophy. Well, we're growing more, we can help more people. Yeah, and in all of this, you end up helping yourself the most. So that's really why I'm not a huge fan of the large nonprofits, because I know how they all have to work. They all want to get paid more, and the only way to do that is to grow, even if it's contra, even if it runs against the intent of the nonprofit.
Right.
So I love that $80,000 a year annual annuity income. And that would be a long-term capital gain, wouldn't it? So if it's actually a married couple can make $85,000 a year long-term capital gain completely tax-free. If that's the only income they have. Most people don't know that.
Right.
The tax brackets work a little kooky on long-term capital gains alone. So you really have a strategy here, so instead of this person, getting hit with a tax bill of $300,000, being depressed about it, by the way, too, that would hurt me. I really wouldn't like, what are you getting for this money? I'm getting compliance. Oh, great. Wonderful. How lovely. But this actually gets you, now you're really able to magnify your gain. And I would say this, think about your life, think about your overall life. Well, now you're known as somebody who really helps people out. And you know what? You're just going to experience a higher, frequency of living. Your people are really going to like you. That's just the way it is. People like who are given.
You can
Not a bad way to be.
You can set up multiple, CRTs. It depends how much you gained in crypto. But
I love it. I love
so
it.
other strategies. I don't know if it's on the next slide.
Let's see what we got here next week. So here it is. Okay, yeah. Here's your recap.
Yeah.
Beautiful recap there. And then, right, and the CRT has been around forever. I mean, even I learned it back in law school back in 2000, whatever, a long time ago. It was well known back then. Yeah, it's a really helpful thing. And and I've done the tax returns as well for these. It's interesting. They're interesting tax returns to do. And I always smile. Oh, I did one. Oh, I did a CRT tax return on somebody who was on the first round of Amazon.
Wow.
He was on the first. I'm like, oh my! And it's still going on. It was, and I mean, what a great move they made back. It was a great move. It was actually his father who set it up, and I couldn't believe it. I was like, wait a second, no way! How did he? Like, so amazing, amazing thing.
Well, you mentioned Amazon. This is how I feel about cryptocurrency. And, there's Bitcoin, there's Ethereum, and some of the others that are the basis for the new financial system that we're transitioning to. I think once regulation comes out, 96% of the cryptos out there will disappear because they won't meet regulatory conditions.
Oh.
Be left with the top 100, maybe 200. But those that real world utility and solve real world problems. But this is that moment I tell people all the time,
Here we go.
coach my clients in crypto, maybe 1 out of 10 listen. And I really believe in a handful of years from now that I will get, she wants to join the conversation. That
she might have something to say. I mean, she does.
It will be that moment when people said, oh, I should have listened to Yael. This is like that Amazon moment, that Google moment. If you could go back, just think when, if you could have bought crypto at $1 or $2, just like Amazon and Google, where you'd be today. People didn't think anything of it, and look what it's turned into. This is that Netscape moment. This is that Amazon moment.
Yeah, and by the way, and Amazon had a scary moment, and that was also what amazed me, because Amazon got hit by the .com bubble. Everybody was thinking, well, Amazon's just like pets.com. It's all the same. So Amazon got hammered and lost, and I guess the smart money hung on to it. So too, because I mean the cryptos are taking beatings all over the place. But on the overall though, right? That's the thing. The overall,
and with every bull market, Bitcoin and the other some of the other cryptos are making higher highs and higher lows, right? Think about what you bought Bitcoin for, then it went up to 3,000, then it was up to 20,000.
Yeah, it was 300. I think it was like $300, $200, something like that. It was for Bitcoin. Yeah, I bought Bitcoin.
Right.
Like, oh, let me buy. Yeah.
Listen, last bull market, the new high was like 69, 70,000. Then it came to the 20s. Now the next cycle, after the new year with the next Bitcoin halving event, you're going to see it, I believe, surpass the 69,000 and hit 100,000, if not more.
Well, then, I mean, really a strategy on this is really, it's like, hey, what, as soon as your gains are there, why, like, hey, look, you have enough gain. Why don't you do the whole, like, okay, donate it to your CRT, get it rolling, get it.
Taking profits, right? You got to take profits, and then you take those profits and you invest.
Right.
Into
And I think, and this is the point I'm trying to get to, is that, when the income tax is driving is the reason why you're holding on to it. It's like, well, yeah, I'm holding on to this stock because I don't want, I would sell it, but I'd get hit with a massive capital gain right now. This is a good point for me. I'm well positioned, but I don't want to sell it because I'm looking at that in this case, that $300,000 tax bill. Well, look, with this, you sort of become, with a CRT, you're like, you don't care. You don't care about what the tax rate is. It's like, look, it's going to work for me no matter what. I want to sell now because it's a good time for my portfolio. Or to not sell, I want to donate. Have I want to donate, and then I'll have my charity sell.
Correct.
That's so your charity selling it now. There you go. That's
there's no gain there. Yeah.
There you go. Right. So that's just something to think about if you're worried. Like, yeah, I want to sell. I kind of want to diversify, but I'm worried about the taxes. I don't want to pay that bill. Let me ride it. Oh, but maybe you wanted to get out. So this allows you to get out without, to make your market moves without tax consequences that would kill you. Listen, speaking of which, here we are. Oh yeah, what's up?
Market right now, obviously there's a lot of volatility in it because it's a new asset class, right?
Yeah.
As regulation comes in, as institutional money jumps in and signals to the people it's safe, you're going to see much less volatility, and it's going to trade more like the stock market. But, for those of us who are early adopters, you have to have diamond hands. You cannot trade emotionally. I set it and forget it, right? It's, otherwise you're on this roller coaster ride of, dropping 94%, then it goes up 80%, then it's these huge swings, huge volatility early on, and you have to just not pay attention to that. You have to know what you have, what you're invested in, and I just hold it and don't even think about it. I know it's a long-term hold for me, in terms of.
It's a long. All right. Well, here we go. Well, we're getting to some not fun stuff, because now we're talking about the 1040 personal tax return, because they added this. Now, as somebody who does a lot of, I do a lot of work with the with the FBAR, the Report of Foreign Bank Accounts, and that there's significant penalties if you have a offshore bank account over $10,000 or more, and the IRS considers many things that aren't bank accounts to be bank accounts. And so it's a really, really nasty thing that I've, been dealing with over since 2009. And so when I see this, now when I see this as a setup, because this is what I see this as. They added this language that says at any time during 2020 or whatever return it is, during the past year, did you receive, sell, send, acquire any financial interest in any virtual currency? If you say no, and you did, what's the penalty?
Right. Well, what's the penalty?
What's the penalty? Well, and then I've gone through the analysis. The penalty is this.
We haven't necessarily gotten that far with them yet, and it's
right. Well, this is why they're setting it all up, because there's no real penalty.
They've tweaked the question a little bit for last year's return, so this is a little bit old. But you have to answer the question very carefully, because if you receive, it depends how you received it, right? Was it a reward, like we talked about last week? It's only a taxable event when you actually sell it. Here, I think they're really just trying to figure out who's invested in crypto. Like, are we building a database of?
Exact. There you go. Thank you. That's what this is all about.
The next layer of, we're going to audit the people in this class.
Exactly.
They've admitted that they're involved in crypto as an investor.
Right. And there is, the only penalty, if you said no and the answer was actually yes, the penalty the IRS would be able to assess would work off on whatever your underreported taxes were. If you underreported your taxes and you owed taxes, all penalties based off of that. And then this is the key difference. With an FBAR, your account doesn't need to make money. It could lose money, and you could still be assessed ruinous penalties for it. But as it is now, and so but watch, I know this will be changing. There's going to be something that comes along where they go along and change this to say it's going to be a standalone form. And if you don't file one, they're going to allow them to seize your property. And, we handle a lot of, offshore stuff, and basically everything they do offshore is a trial balloon for what they're going to impose on all Americans. And, that's what we see. That's what I really see happening here. This is all a setup for them. so that they can, have a pool of people to audit and terrorize.
Mm.
So here we go. This is about just sort of recapping about who
Yes.
needs to file that one. And
Here,
there's okay. So here we go. The 4 events that trigger taxable event. Let's
right.
go through those.
So if you're trading crypto to fiat currency like the US dollar, that's a taxable event, right? Because you're selling your crypto and you're exchanging it for the dollar. If you're trading one crypto for another crypto, that's going to trigger a taxable event, right? What you purchased one for and sold it to the other. And spending cryptocurrency to purchase goods and services, like if I used Bitcoin to buy a Tesla, right? You're having to basically sell the Bitcoin, in essence, to purchase the car, right? So the value of what it was when you purchased it and the value what it was when you used it to transfer it to Elon Musk to buy your Tesla. And then if you're earning cryptocurrency as income, so like staking rewards, if I stake my, if I staking means if I'm loaning my crypto to the network to be to make the network secure for them to use the crypto for the computing power, they're paying me rewards for doing so. That's considered income.
Okay, so let's see here. So, okay, here's an example. Okay, here you give me a
So
great
Taylor
example,
buys
right?
1,000 XRP from Coinbase, that's the exchange, for $1,350. And 5 months later, following the filing of the SEC lawsuit, she sells it for 900. That sale created a taxable event. And then in this particular scenario, she actually has a $300 capital loss. So in reporting this loss, she actually has a decrease in taxable income. It's not always going to be a taxable gain, right? It's just like when you're selling stocks at a loss.
Yeah, and I think the IRS is all geared up for a lot of these examinations, and they were going after people in 2020, 2019 when people had a lot of losses. Like, I don't think you're going to get what you're looking for. People did lose a lot of this. Now, here's something that's sort of this is really where my thinking is, because this is how I think. So let's suppose somebody says, you know what, I want to evade my taxes. I really want to. I want to do it. I want to go all in on evading my taxes. So I'm just going to keep a few different wallets. And you know what? Maybe I have one wallet that I will report to the IRS. That's the one that has all my losses. But the ones with my gains, I'm going to be on parallel systems, and they're not really going to be associated with each other. Would you say that that would be something that's feasible to do, or something that wouldn't be feasible?
Listen, there are tons of transactions that, people feel, well, they don't know I have this crypto. You have to remember the blockchain is open and public and transparent.
Mm-hmm.
So the IRS does have, people, they hire the hackers, to track these and to track the gains, to track the wallets. Will they find one? You don't have to buy a full Bitcoin, right? The thing with crypto is you can go up to 8 decimal places, right? So you can invest $5, $10. Are they going to waste their time and find these tiny little transactions you're not reporting? Probably not. Operation Hidden Treasures right now, they're looking for, the $10 million and up, the crazy gains that people made with Bitcoin from the early adopters.
Mm.
Every,
Yeah.
sorry,
Well, the IRS makes a lot of claims who they're going to audit, and oftentimes those audits don't happen. So all right. So let's go on to the next slide here. Cryptocurrency to cryptocurrency. By the way, this is something that changed, I think, because prior to 2017, you could do like-kind exchanges for things other than real estate. And I believe you would have been able to do this. You could have gone cryptos for cryptos and done that in a 1031 exchange and deferred any taxation on that. But that's long gone. Whether that was possible or not doesn't matter, because that's no longer there. There is no 1031 exchange anymore on cryptos, if there ever was.
right.
So this is also deemed to be a taxable event.
Right. So here in this example, Taylor buys 5 Chainlink for $250. After several months, it's worth $500. And then she trades her Chainlink for 0.04 of Ethereum. So in this example, Taylor incurred a taxable event by trading her Chainlink for Ethereum, because first she had a $250 capital gain that she made on the Chainlink, right? And then she traded it. So she's got to report that $250 gain. So it's not so much the crypto to crypto as it was the gain on the original crypto when she flipped it.
Got it.
Right.
All right. Moving on. Slide 22, cryptocurrency to goods and services.
So Katie owns 10 Bitcoin. She purchased for $300. Since that the price of Bitcoin has skyrocketed, she decided to buy the Tesla for
Always a Tesla, right?
well, Bitcoin for 50,000. At the time she purchased the car, one Bitcoin is worth 25,000. So in this scenario, she incurred a taxable event when she disposed of the Bitcoin for the new Tesla. She incurred a $49,400 capital gain, right? Because she bought it for where she used 2 Bitcoin, which was at 300 a piece, was 600. It was then worth 50,000. So she's got to report that capital gain on her tax return.
You know, what's really upsetting in all of this for me is Katie's nonprofit really should have bought that Tesla, I think. Don't you think? That would have been a better use. That nonprofit needs transportation. You know, you got to be able to get around here. That would have been a nice little move, I think. There,
or you could use the $80,000 from the annuity.
That's not a bad idea either, right? That wouldn't be so bad, right? Yeah, exactly. Could be, yeah, right. Earning cryptocurrencies.
All right.
So this is form of okay. So Bitcoin miner, would that fall into this too? That's just ordinary income, not long-term capital gain.
Like mining and staking and the earned interest. So cryptocurrency is earned in the form of ordinary income and not capital gains. So this includes cryptocurrency received from mining, staking, or earned interest. And it needs to be reported one of two ways, either as personal income or as self-employment income. And I'll discuss where all this gets reported on your tax.
All right. Well, what about could you have an S corporation own your crypto and avoid self-employment taxes? Okay, good to know. Hey, you might, at least at a minimum, try to do that, right?
All the miners should be set up as LLCs or S corps, or because you can write off all of the computers, the utilities, that you need.
If you are, thank you for that, Yael. You're absolutely right. You should be set up as an S corp. And here's the other thing that I think is, and you're seeing this too, the audit rate. The audit rate of a personal return. If you're putting your cryptos on a personal return, okay, you've increased your audit rate because it's something that an IRS examiner can understand. If you put it on a business return, and really a 1065 would be the one I recommend, if or an S corp would be an 1120S, your examination rate goes way down. So you just don't have to worry about that entire invasive IRS examiner coming to look at for you. So I would say that is absolutely true. Every Bitcoin miner should not be putting this on their personal return, but rather a business return.
Right. So cryptocurrency that you've earned personally, just me personally, trading myself, needs to be reported on Schedule 1 under additional income and adjustments to income. And it goes on line 8, other income.
Yeah. All right.
Right. So.
Oh, here you go. You even have it. Oh, wow. That's nice.
Line 8.
There you go. Line. Look at that. Oh, wouldn't be. Yeah. And just keeping that number low, maybe having your charity take that instead. That's a pretty good one.
So self-employed, if you're running a mining operation or receiving cryptocurrency as self-employed individual, as a sole proprietor, independent contractor, member of partnership, that goes on to Schedule C.
And you know how I feel about Schedule C.
Yes. So
I'm right. If you're doing it personally, that's where it's got to go. That's why you want a business running it.
And you're getting hit with that self-employment tax, right? 15%.
Ooh, I think it's 15.9. Yeah, it's actually somewhere around. Yeah, but basically it's that your self-employment tax is one of the nastiest surprises for people once they start a side hustle.
Yeah.
And then it's ugly. Okay, so there we go. Right, and I think that whether you report now, here's the difference on a Schedule C. All the deductions that you're entitled to, you're legally entitled to them, but they may attract the attention of an IRS examiner. But when you put on a business return, they're looking at it different. Like, oh, this is a business. It has expenses. What else would it do? We
talked about 2 podcasts ago, right? The S corp audit rates are going to be going up, doubling, but still only 1%.
It's still lower. Yeah, still far lower than. And then the partnerships, they don't know what to do with. They're still out there spinning the wheels, trying to get a bunch of fear and loathing out there, but they still have significant problems. with the partnership returns of 1065s. So here's your Schedule C. Look at that beautiful Schedule C. And oh man, this is a dangerous form. I always go through it. I think this is one of the most dangerous forms anyone could file. But this is where it goes if you have not set up an entity. You're absolutely right. Because if you look at this, a profit and loss from business, right? This is basically what was your revenue, and then what were your expenses, okay? That's simple enough for any taxpayer to really understand, which means it's also simple enough for an IRS examiner to understand. And there's your problem right there. So you want to maybe get on a more complicated form. You always, the strategy we've been saying for years, you want to out IRS the IRS. So they have to deal with themselves, and they don't like that either. That's the last person the IRS wants to deal with is the IRS.
Right.
All right. So here we go. Okay. So here we go. We got, oh man. Okay. There's a bit here, huh?
Filing the cryptocurrency gains and losses sort of works the same as if, you're reporting gains and losses from stocks and other forms of property. So there are 5 steps. First, you got to, you'll calculate your crypto gains and losses. You put the information on that form 8949, list every transaction. The totals from those flow to Schedule D. And then any crypto income would go on Schedule 1. And then you finish the rest of your return.
All right.
Sounds simple, but if you've got, it's really the hardest step, I think, is number 1. Because
and this in their software, and I think we use the software too. I'm pretty sure.
Well, there is.
I know we do. I just don't do it myself.
No software. I send a link to each of my clients to connect their exchanges or wallets to the crypto tax software, and they will download all the transactions, and it downloads into 8949 because it is complicated. I mean, I've kept track of all of my transactions, but you need to know the timestamp. You need to know when you purchased it, what you sold it for, what the price was, what you flipped it for. I mean, and I keep track in a little book, handwritten, old school, even on the computer. But, some of the exchanges now, like Coinbase, are now issuing 1099Bs, which is new, right? So whereas before you could, if you thought you could get away with not reporting transactions, there was nothing showing up on a wage and income transcript with the IRS because nobody was filing anything. Now they're trying to get these brokerages, the currency exchanges, to start filing, and sending 1099Bs and reporting. That's kind of their way. It goes against the whole, decentralized nature of crypto in the first place.
Yeah. All right, so here we go. Schedule D. This is where we calculate our gains and losses here. It's always an exciting part of every tax return.
Yeah.
Okay, I don't know what this is. So everything I understood up to here. Airdrop.
So an airdrop, certain crypto projects at certain times will airdrop. They will drop into your wallet, into your account. Their tokens, as rewards, as a new project, as check out our new.
Yeah, there's something like Bitcoin Cash, right? Like I had Bitcoin, or a friend of mine had Bitcoin, and then he got Bitcoin Cash. He got like $13 of Bitcoin Cash, whatever that was. Is that an airdrop?
Depends how he got it, but like new projects,
he got it for being handsome or just no reason at all.
New projects to bring attention to their project. Sometimes we'll do an airdrop as a reward. Okay. If you're holding XRP, you may get an airdrop of something else if they have a partnership or it's just it's just like a gift, it's a gift. So, unit tokens, for example, Uniswap, which I hold, that are claimed from the Uniswap airdrop are treated as income. That means you're liable for income taxes, on the dollar value of that airdrop.
The day you get it or the day you sell it?
Well, the day you get it is your basis.
Okay.
Right.
When I get it, I don't have to pay. That's my basis, which I'll have to pay when I dispose of the asset.
Right. So I think it's on the next.
Oh, okay. I'm just jumping ahead. Oh, okay.
So here. Uniswap, July 2020 realizes he can claim 400 Uniswap tokens with the airdrop.
Yep.
Right. At the time of claiming the tokens, a single Uniswap token is $350. So Daniel recognizes a gain of $1,400, right? What it was worth that day, because his his basis was zero. He didn't pay for it. Right. So the day that he got it, it's worth $1,400. Right. So depending on his marginal income tax bracket, he'll pay a certain percentage of tax on that $1,400 of income.
Okay, so it is taxable when you receive it, but that amount is also his basis.
Well, his basis is zero, isn't it? Because he didn't own any.
But well, in this case,
right. So he's paying the gain on the 1,400 because he didn't pay for it.
Right.
His basis was zero, is 1,400. But then when he goes to sell it, I would assume. I mean, this is where it's a little. There's always gray areas, right? So
I would think, right. So this is something. So it sounds like he would have a because he's like, well, he's forced into disposition. He's like, well, you received something worth $1,400, so we're going to tax you on that. So I would say that's probably his new basis on the additional gain, because I mean, the IRS isn't going to about to give any breaks anywhere.
Right. So he's paying on the gain as income, right? Because he got 14 plus, but then again, he'll get taxed again when he goes to sell any of those tokens, right? And so
and receiving that would be a short-term capital gain, or would that be ordinary income? It doesn't matter. It'd be ordinary income or short-term, doesn't matter in that case.
Ordinary.
Yeah.
Ordinary income.
Right. So, okay, here we go. Airdrops present a slightly hazardous tax situation as a result of being recognized as income at the time they are received, as you said. Right, exactly. Okay. For example, if you received it on September 15th and saw the certificate drop value later, you still, oh, yeah. Ouch.
Right. So he's still on that 1,400, but if it dropped in value, you're still having to pay what it was worth the day that you got it.
Wow. If you really hated someone, wow, you can really whack them. Like, yeah, this is never going to, it's worth this and it's never going to go up again. So, wow, that's, now you have a loss, I guess that, oh man, that's a good question.
Well, you'll sell it at a loss.
Yeah,
but
sell it at a loss.
You still had to pay ordinary income tax date of what it was. Got it.
All right, so here we go. We got some how to calculate your tax rates here: short-term versus long-term, less than a year.
Short-term, longer than a year, long-term.
Yeah, it's a matter of time, and whatever reasons are. The government wants it incentive. The government just wants. Let's just put it that way. Okay, DeFi crypto, decentralized finance. That's what that stands for, right? In a lending, yield farming, liquidity pools, borrowing, and earning. Well, okay.
There are cryptos out there that pay royalties, right? And if you hold like Ethereum at some point, if you stake, I think Ethereum, you have to have 32 Ethereum to be able to stake it, which is a lot of Ethereum. It's worth around 1,700 a piece. But enough of these, a lot of these crypto projects will pay you to hold their crypto and to stake it, right? And you can make it, depending how much you have of it, you can generate enough passive income to live on just by your crypto holdings, but then there are there's all these other kinds of, this is where you get into trouble, right? With the different crazy, 400% gains, yield farming, liquidity pools, other things like that. That's where people got into trouble, right? It's not just holding the crypto like you're holding a stock, right? It's when they started doing these crazy other financing options, where, things like FTX and other networks, right? So we're still waiting on.
Here you are.
Waiting on guidance. The SEC's lawsuit against Ripple, whose native token is XRP, was really important because every country in this world viewed XRP as a currency. The US viewed it as, or the SEC was trying to claim that it was a security. So we just came out of this 2.5, 3-year lawsuit where the judge finally put an end to the mystery and ruled that XRP was in fact a currency, right? And so not within the purview of the SEC's guidelines. Create a new Howey test, right? Because the test that's out there, what determines as a security is not the same. Cryptos are a whole new asset class. It's completely different than stocks, right? So there is this debate, who's going to regulate it? Is it the SEC? Is it the commodities trading, bureau? Is it some other governing body? you've got, we talked about this on the podcast a couple of weeks ago. You've got Congress who's trying to legislate on things that they don't even understand.
Yeah.
Right. So,
well, that's everything, right? I mean, that's a lot of things. They don't read anything because they don't understand it. They don't.
That was huge, for XRP to win that part of the lawsuit. Right. And as now you've got BlackRock, right? The largest asset manager in the world, where they have $10 trillion under their control.
Sure.
They have filed for Bitcoin spot ETF, right? And a couple of others, Vanguard, whatever. So when something like that, when that finally gets approved, and we all know BlackRock, come on, we all know at some point it's going to get approved, you're now going to see all the institutional money jump into cryptocurrency, which then signals to everybody else, oh, it's safe. It's not really a Ponzi scheme. Listen, for years, Jamie Dimon, the CEO of JP Morgan, right, is always pounding, it's a fraud. It's a Ponzi scheme. I'll fire any of my employees that trade, in cryptocurrency. Meanwhile, all along, they're developing their own blockchain, their own crypto, do as I say, not as I do.
Not the straightest shooter there, right? There might have been an incentive to tell something.
Incentive. They don't want, people like us making generational wealth. They want to.
No, that's not right. Right. And that you actually have cryptos are actually, an ability to create that generational wealth. And the IRS doesn't want it either, because they're looking to, hammer you on, hey, you had a good day. Oh, great. You're going to not be so happy now. And I think that's really why it's critical to make sure you have a great tax plan. Think about what you want. Now, something we didn't mention, we mentioned it very quickly, and it was on an earlier slide. And this is something, let's see here if I can find it way earlier here. And I would just say here, because you have the name of the company to use. Where is it here? Where is retirement? You have it right here. Okay. Right. Here you go. This right here.
Is that you can become your own bank, where your credit score won't mean anything, right? With my crypto gains, let's say in the next couple of years, what I hold explodes. I can borrow on these platforms. I can borrow against my own crypto to purchase a car, to pay for my kids' college, to pay off my mortgage on my house, to buy an income producing property, a real estate investment, that creates passive income. I actually, and I don't talk about things unless I've done it myself. I have rolled my traditional IRA and my Roth IRA and my SEP IRA into crypto Roths and crypto traditionals and crypto SEPs through directedira.com. There's another company, I Trust Capital, but they only operate in 49 states because God bless New York, the worst state for crypto. But Directed IRA you get to invest your crypto through them, through the Gemini exchange, which is the Winklevoss twins, which operates here in Gemini in New York. They have their BIT license. So because of them that I'm able to do that. But think about it. The money that I've rolled from my Roth, right? What's the beauty of a Roth is that all your gains, when you pull the money out, it's tax-free. So when my Bitcoin and my Ethereum and my other cryptos that I hold in my Roth explode to exponential gains, all those gains are tax-free.
That's pretty good. And, it just doesn't work with cryptos too, because your self-directed IRAs are one of the best ways to own. It's a great way to own real estate as well. So it's something to look into. Thank you for the link to Directed IRA. It's something I have to reach out to them. I have a lot of people always asking about, well, where do I go? Where do I go? So there you go. There is somebody.
They have, you've been to their website. They don't have just cryptos, crypto Roths and SEPs IRA. They've got real estate, investment strategies. They've got a lot on their website that they offer, which is amazing.
They should probably pay us to promote them. We're not getting anything from them for recommending them. That should change, though. I think
we are not. We are not.
Yeah, we're not. So I think we did a great job today. By the way, I want to thank you. I understand cryptos much better, and I really see the value of the charitable remainder trust in this case, along with the IRA. Those are really two fantastic ways. And I would say this: a crypto investor, no matter what, carries a substantial amount of risk in their investment.
A certain portion of your portfolio, right? You're not going to put all your eggs in one basket. to diversify. But
Yeah.
just to simplify it, the way I see it is that Bitcoin is like digital gold. It's going to be the new store of value. That's why you have Michael Saylor of MicroStrategies and Elon Musk and all these big corporations that hold it on their balance sheets now, right? Because they know where it's going. They know what the value is going to be. Ethereum is basically the new layer of the internet, Web 3.0, right?
Yep.
Everything's being built on Ethereum. There are other similar networks, but Ethereum is the first, right? And so I sort of view it as silver, little gold's little sibling.
Yeah, and I remember I had a client recommend Ethereum to me in 2016 or 2017, and here's his reasons why. He goes, "You know why I know Ethereum's going to be big?" I go, "Why that?" He goes, "Well, if you go to GitHub, he goes where all the apps are made, you'll see more development on Ethereum than anything else." And
Mhm.
so whatever it was, and so that's something to think. I was like, "Wow, did he end up being right?" I was like, "Oh, geez,
Yeah, Mark
great
Cuban,
advice."
Mark Cuban, Shark Tank is very heavily invested in Ethereum as well. Lots of people, you look at someone like Warren Buffett, he won't touch this stuff. But if you
He doesn't need to.
no, he doesn't need to. But look at what he's invested in. He's invested in the blockchain. He's invested in the infrastructure. So he may not hold the actual cryptos,
Okay.
but he's invested in everything else that supports cryptocurrency.
Yeah, it's selling the shovel or selling the gold digging equipment, not being a gold miner,
Right. Right.
basically. So
Blockchain
not a bad way to
the
eliminate some
blockchain is
risk.
different. The blockchain is different than the crypto. The blockchain is the infrastructure. If you look at Bank of America, I think they have 80 patents for the blockchain and cryptocurrency.
Oh,
If this was all a Ponzi scheme, would all the major
yeah.
institutions be invested in all of this?
Mm,
You know, we've
mm.
already made
So
the
those
banks
are
have already made the switches. Can't you see on your online banking, digital wallets? The role of the banks are going to be changing, right? It's going to be more of them wanting to custody your cryptocurrency. Now, between you and I'm going to
Oh, yeah, right. So they can
hold,
loan, so they can loan, so they can lend, you
nah, I'll
know.
be holding my
All
own
right.
currency. I don't
Yeah, I
need.
think that's a good idea. Yeah, I don't recommend that because they're going to borrow against that so they can lend out more for sure. So yeah, be careful of that. All right, Yael, what a great podcast. People can reach you here. Here's it. When was that picture of you taken? That's a delightful picture. Was that what year was that? That's
About 2 years ago, year and a
2
half.
years ago. Nice. So Yael's out on Long Island. She
Don't look
helps
the
people.
same?
What's that?
Are you implying I don't look the same as my picture anymore?
You haven't aged. You're timeless. You look exactly the same since I met you in 2008. You look exactly the same. Only more lovely and only more younger.
Oh, you too.
Um, yeah, Yael can be reached here. She helps out a lot of crypto investors. So if you're looking for
And
some help, reach out.
it
Um,
with the crypto taxes. And honestly, I love coaching people who want to get into crypto. I do a 6-week course with them, one-on-one training, how to, set up your account with the
oh,
exchange,
wow.
how to purchase, how to sell, how to transfer it safely, how to transfer it to your Ledger Nano. So I'm trying to get as many people to create generational wealth and get in on this while the prices are still cheap. I mean, it's very late for Bitcoin. You're never going to 50x your money, but there are a lot of good real world solve cryptos that are trading right now for 13 cents, 50 cents, a dollar.
Oh,
Even Ethereum is still, it's around 16, 17, 1800. It's still, much more affordable than Bitcoin. A lot of people like Kathy Woods of ARK Investments and Tika Tawari, who's one of the number one guys in crypto, they've all predicted, Bitcoin going to 500,000. I still think it's a couple of cycles away, but I do think in the next bull run, next spring, you're going to see a new high of Bitcoin hitting at least 100,000.
I kind of see the half a mil. I
Yeah.
kind of see that
Well,
coming in 10 years. In 10 years, I see that happening.
yeah. I mean, some people
I think that's,
like to
yeah.
see $1 million Bitcoin, but
All
you know,
right. Well,
you
Well,
know,
all right. So if you want to become, if you're new to this, you want to get some intel, really do it the right way. Reach out to Yael; she'll walk you through the whole thing. All right. Thanks again, Yael, for watching. This is Anthony, parent of IRS Medic. Be sure to subscribe to the channel, and if you could turn on those notifications for me, that's going to help you out because when we go live, you'll get a notification we're going live. So when you have questions, you can say, "Hey, I got a question right here." we want to answer. So again, for Yael, this is Anthony Parent. Thanks for watching.